Your Highness Sheikh Hamad bin Zayed Al Nahyan, Your Excellencies, ladies and gentlemen, good morning and thank you for joining us today. It's a pleasure for me to be part of this event and moderate the first panel for what has become one of the key events in the world, not only in the region. It's a timely conversation where we will tie together some of the landmark developments that are part of the overall strategy to drive growth and diversification in Abu Dhabi. Your Excellency Khaldoon Mubarak, let's look at Mubadala before May 2017. The company was on good footing. You were doing just fine. IPIC as well. Why merge?
Well, the logic of that merger, I think, was very clear. It was time. These were two companies that were doing very well, as you mentioned, that had a strong portfolio respectively. But there was a very clear direction from the government of Abu Dhabi that the merger of these two companies will create a global powerhouse, that the synergies would bring a lot of benefits for the shareholder ultimately, which is the government of Abu Dhabi, of both companies, that the scale would strengthen the balance sheet, and that the combined portfolio will create a more diversified overall portfolio and a better distribution of risk. All that really has happened. It's been a pretty straightforward merger. I've been involved with many mergers over the last 10 years, some of them we mentioned. This one was probably one of the easiest ones. It helps when you have the same shareholder. That takes away a major component of any merger, which is negotiation on valuations. That was not really an issue in this merger. The challenge was more, I would say, a human capital challenge and a strategy challenge of putting together a unified strategy for the combined company. That's been done. It was executed over 12 months, and I'm proud to say the merger is now complete. The combined company has been operational for 1 year almost, and very shortly we'll be announcing the results for 2017, which were extremely positive, and I'm very proud of what's been accomplished through this merger.
Your Excellency, Dr. Sultan Al-Jaber, walk us through all the changes you've done to ADNOC since you became the CEO in 2016. There is a lot to say.
That's a very broad question. Well, let me tell you about the transformation that has happened in ADNOC. And I know that this is a question that crosses almost everyone's mind. Why and why did it happen? And why this fast? And why did we adopt such a holistic approach in helping accelerate the transformation across ADNOC? Well, first of all, I find it to be very natural for a company like ADNOC to go through such an exercise. It is also logical for a company of the size of ADNOC with such impact on the UAE economy to undertake such a massive holistic approach in transforming the company. Now, how did ADNOC evolve? The very fact that ADNOC is actually participating in such a sophisticated financial forum is a very clear indication of that transformation. The very fact that ADNOC is having such an open dialogue with new partners like financial institutions, private equity funds, investors from all over the world is again another testament and demonstration to ADNOC's openness in terms of adopting a new approach in conducting business and attracting new partnerships. Now, what we have done so far is simply very much focused on one main objective, and that is simply unlocking the full potential of the whole value chain of our company, as well as ensuring that we're maximizing value in every step of the way. How did we do that? We did that by adopting a two parallel track approach. The first track was very much focused on optimizing our resources, ensuring that we maximize value throughout the whole exercise. And the second track was very much focused on maximizing value by opening up ADNOC for new relationships, new partnerships, attracting investors and partners that will come with new creative ideas. How can we comfortably say that we have been steadily progressing towards our ambitious goals? Look at what has happened in only the past 18 months in ADNOC. The fact that we have been able to IPO one of our leading retail companies in the UAE, ADNOC Distribution, the fact that we have been able to attract such an attractive loan to fund our future growth, the fact that we have changed the mindset in the company of us being more commercially savvy and focusing on our efficiency and profitability drives within the organization, and embedding a new performance-led culture is another indicator of the success of the transformation going forward. And the fact that we are now, while we appreciate the impact of our operations in the upstream, we have clearly introduced the fact that ADNOC has to go downstream in order for us to be able to maximize value and stretch the dollar. And soon, ADNOC will be announcing its comprehensive, holistic approach in terms of advancing our downstream drive by doubling our refining capacity and petrochemical capacity.
So many interesting points you've mentioned. We will come back to them. But before that, Mr. Abdulhamid, Saeed, the merger between the National Bank of Abu Dhabi and First Gulf Bank definitely created a bigger bank with more weight and influence. But what was the main reason that convinced you that the merger was right?
I think, first of all, convincing, not me, I think it's convincing the shareholders. This market has, or had actually, more than 49 banks between local and foreign banks, right. Very scattered, very concentrated in different pockets of target markets. So the 50 banks almost, maybe 5 of them before the merger, had maybe 70% of total books in terms of deposits, in terms of loans, asset size. The leadership, along with the shareholders, opted to go for the merger because the need for an institution that fulfill the requirement of the growth we see in Abu Dhabi, as you just covered with my colleagues around here, of what they saw in different areas in the economy here. So that was one need. The other, we found out that in the rationale for the merger, it was coming from a bank which was mostly entrepreneurial type of management, a privately managed, and a government. So there was a right mix of having a new bank, a bank which had maybe presence internationally, so available in almost 20 countries, with another bank which was focused locally, focused more on sales, a bank which had basically more of a driving to results from the other bank, which was more relaxed in terms of liquidity. So we had the good combination to create a new bank. I think the good thing happened in this market, and I did not see this for maybe almost a decade in banking, for example. We've been looking for a merger of a different type of bank. This merger did not happen because of a need or a necessity of a bank which was going weaker than others.
Which is a very good point.
Which, on the contrary, both banks were at their peaks of performance. Both banks were strong. And that's the message that the leaders here opted to create a bank that had the strength to take it for a further strength. So, rationale was it, if you ask me again, you just said in your question, it is size. It is something that you want to take it for beyond Abu Dhabi or UAE, so you can grow globally. I think that objective been met by having these two banks combined together.
Thank you. My next question now to you, Your Excellency Khaldoon. The merger between Mubadala and IPEC, how does it fit the transformation journey of Abu Dhabi?
Sorry, how does it fit?
How does it fit into the overall strategy of Abu Dhabi of diversification and transformation?
I think it's a story of both consolidation and diversification and finding more efficiency and establishing scale through building these global competitive champions. So every one of these stories we mentioned, I think, just before I go back into Mubadala, the logic of establishing FAB is very simple. I think I concur with everything Abdulhamid mentioned. You are creating a global champion. You are creating a bank that can compete not just in the UAE market, but I think in the region and in the world. You're creating a bank that is combined, has scale, and is now considered one of the 15 largest banks in the world. So I think that you achieve by creating this business champion. In Mubadala, it's a similar story. We're doing that at the holding company through that merger that was established between Mubadala Development Company and IPIC, establishing Mubadala Investment Company. But we're also doing it through many of our investment companies and subsidiaries. We've done that by establishing Emirates Global Aluminium, as an example, echoing the same theme that I'm describing.
I will actually come back to that story because I think it's a very interesting story.
It's relevant in the sense of your question of what are we trying to achieve here in Abu Dhabi and in the UAE. Emirates Global Aluminium is a result of a merger between a company that 50% was owned by Mubadala called Imal, Emirates Aluminium, and Dubal. Dubal, of course, is Dubai Aluminium with a 40-year history in the aluminum industry. The combined entity, through that merger, established the 5th largest producer in the world, has positioned EGA, this new company, as one of the most cost-efficient producers in the world, one of the largest producers, so scale, cost efficiency, scale, competitiveness, and the economic side. Today we are producing one of the highest quality products in the world at EGA, and we're doing it at an effective cost, at a competitive cost, and you're seeing that in the results, the financials ultimately, because any merger can be only judged by the results. And if you look at the economic and financial results of the merged company, they speak for itself. So we have a global champion now in EGA. We have a champion that can go to a place like Guinea, the Republic of Guinea, and build a bauxite mine, one of the largest in the world, that's going to be producing 12 million tons of bauxite. We are producing 2.6 million tons combined of aluminum here in the UAE, which makes it one of the largest producers in the world. We are investing in a 2 million ton aluminum refinery here in the UAE. So this combined company is now a global player. That applies to also many of the other mergers that have happened in the UAE in the past, the real estate development merger of Al Dar and Suruh, which creates again a major powerhouse in the real estate development market. So the theme here is we've created these companies in the UAE. Abu Dhabi has created many of these companies over the last 30, 40 years. These companies have reached a level of maturity where consolidation makes sense. And the logic is we need powerhouses for the future that can compete, not just in the UAE, but internationally with strong leadership, strong management teams, and a firmer balance sheet.
We're not done with the EGA because I think everyone is waiting to know when this company will be listed. But before that, I need to ask Dr. Sultan Al-Jaber, Your Excellency, how does ADNOC transformation fit into Abu Dhabi's push for economic development?
In line with Abu Dhabi's economic diversification plan and the fact that ADNOC has embarked on such a serious holistic transformation approach, and the fact that ADNOC aligning itself also with the different consolidation activities that are happening within Abu Dhabi, and the fact that ADNOC was able in a very short period of time to consolidate ADMA and Zatco, it becoming the largest offshore operator in the world today, and the fact that we've been able to also merge Isnad Irshad ADNOC, making it become one of the largest logistics and services specialized in oil and gas companies in the region. These are all very clear signals of the alignment of ADNOC's approach to the overall Abu Dhabi economic development plans. Having said that, we cannot in any way undermine the impact of Abu Dhabi's contributions, ADNOC's contributions to the overall UAE economy. That impact has always been very evident, And in fact, what we are trying to do right now with this transformation strategy is to simply deepen and expand the spillover impact of ADNOC's contributions to Abu Dhabi's and the UAE's economy. What sits in the heart of that is the in-country value initiative that we just launched only a few weeks ago. Here, with this initiative, we do engage with our international partners as well as our local private sector companies by advancing the value that is actually generated locally with a direct impact on our local economy. And as such, we encourage our international partners to partner with small and medium-sized companies in the UAE, encourage them to be more efficient and more optimized in advancing their services and their businesses in the help of meeting ADNOC's requirements. ADNOC, for the first time ever, through the Supreme Petroleum Council, announced its CapEx program, its capital expenditure program for the next 5 years, which is around $110 billion US. That on its own is a great achievement. It shows how transparent ADNOC is. It shows how ADNOC is trying to reach out and go out of its way in accommodating the private sector, local and international, and encouraging them to work together in harmony and helping meet the very ambitious agenda of ADNOC while embedding in the mindset of everybody the importance of advancing our domestic private sector in the business side of ADNOC's operations. Having said that, we need to also remind ourselves, and especially with this transformation exercise that is being undertaken in ADNOC, we will, as we did in the past couple of years, engage more with the financial sector, with the financial community, and one of the criteria that we will be evaluating in such new relationships is their in-country value. Have they, for example, taken Abu Dhabi Global Markets as their premier destination? Have they decided to locate physically in Abu Dhabi Global Markets? We do care about in-country value, and this is not only a propaganda. We are actually going to be measuring such relationships against the very set and clear criteria that has been set forth by the Supreme Petroleum Council and ADNOC in helping advance the local economy. So in a nutshell, ADNOC's contribution to the UAE economy and Abu Dhabi in particular has been very evident. Our job now is to simply focus all our efforts in deepening and expanding that contribution to the local economy.
Thank you. And I think also all the steps that you've mentioned have been received very positively by the markets all around the world. Mr. Abdulhamid, FAB is of course a very big bank now. You contribute to the economy, yet you're a global player as well.
I think if you rephrase the question and tell me, what do I think I need to do as a FAB today? My colleagues already talked about it. Thinking of Abu Dhabi as a big and attractive global market today. Thinking of it's a market center that attracts people, and thinking of what just Khaldoon and His Excellency Sultan said. The bank strategy ought to be, they need a strong bank next to them and next to a lot of Abu Dhabi economy to drive toward the economical vision of Abu Dhabi 2030. Abu Dhabi, as you just noticed, going through a lot of transformations. You definitely need a bank, and a strong bank, a bank with a good rating. We're a AA rated today, one of the safest banks. They need a bank that will plan along with them and try to strengthen all sector of economy, especially the financial sectors in Abu Dhabi. I think what I see here today is also I see the agility in the mindset of the government, transformation into the entrepreneur mentality, which will ensure that, and as you just Sultan said, that you're going to keep us on our toes to ensure to deliver to the best to the government. The demand will increase, so you definitely need a bank that can fulfill that, a bank which can compete not only locally but can do things internationally to ensure all the Abu Dhabi's requirement is met. Thank you.
I'm gonna go back to EGA because I'm very interested in the story. I think it's another successful consolidation in the UAE because it's between Dubai and Abu Dhabi. You've created a powerhouse. You've created, as you mentioned, a global champion. Speaking at the FII, I was there, and you mentioned that you wish to take this company public in 2018. Tell us, how's the time frame looking like now?
So we spent, obviously, many years developing Emirates Global Aluminium to what it is today. Today, you look at, let's look at financial performance. We've just published our results for 2017, net income of $900 million, up 59%, I think, yeah, 59% from last year. EBITDA of $1.8 billion, up 31% from last year. And we've declared a dividend of $550 million, which is also a significant increase from last year. So the company has been doing extremely well. But it's been doing that while maintaining, one, its top quartile in terms of profitability, and its top quartile globally in terms of cost. And at the same time, the quality of the output is in the top 10 percentile in the world. So this is an engine, a machine that we've worked very well. It's an industrial champion. It's the largest exporter in the United Arab Emirates outside of the oil and gas sector. It employs one of the largest employers in the UAE. It is the largest partnership between the government of Abu Dhabi and the government of Dubai, 50-50, owned between the two governments through Mubadala and the Investment Corporation of Dubai. So it's really a flagship company. And it's in a very good standing. If there's ever a time, we believe, to put it to the market, we believe now is the time. 2018 is the year we intend to take Emirates Global Aluminium to the market. It's a company that's well positioned. We've de-risked many of the capital investment required. So the entire smelting capacity has already been invested and is operational in both Dubai and Abu Dhabi. Our capital expenditure with regards to our new refinery is over 85 to 90% complete as I'm speaking right now. And our major investment in Guinea in this new bauxite concession is also well under the development. So also from a capital cost perspective, most of the capital costs will be de-risked by the time we go to the market. So this is really, I think, a big success story for the UAE. And we believe will be a very good time for it to go to the markets this year. Obviously, the time will depend on market conditions, but both shareholders are committed, and we are very excited to do that.
First half or second half of 2018?
Depend on market conditions, you know that. I would not want to put that sort of pressure on the management team. We are in the right spot. We are in the right place. It depends completely on market conditions. By the way, just to add, on the point of the success of these mergers and these operational efforts, I will leave Sultan maybe to give you data points if he chooses to do so. Being a member of the SPC, I'm privy to the data. The performance in 2017 of the ADNOC group of companies has been exceptional. And I use the word exceptional, which tells you these measures, there are tangible results. The merger of National Bank of Abu Dhabi and First Gulf Bank, the results have been published, and they are exceptional. This is the largest dividend distribution that's ever been given by the combined banks. So the profitability, the OPEX, I think we've achieved over $1 billion dirhams in cost reductions in 1 year in the bank. And that all goes back to the benefits of the shareholders. So again, when we talk about what we were describing, you have to talk about it with tangible results. And I think in all these cases, there's tangible results.
Absolutely. That's key, actually, going forward. Dr. Sultan Al-Jaber, speaking of IPOs, I would like to understand more how has ADNOC engaged and worked with financial community throughout the transformation journey?
Yeah, well, in fact, I must say, being in such a sophisticated forum with such a esteemed audience, the progress made so far would not have been possible without the direct contributions of our financial partners, of course, starting with FAB and many others. Throughout this journey and every step of the way of this journey, we will always be very much focused on reducing our cost, enhancing our capital structure, maximizing value, unlocking the full potential of the whole value chain of our business. And as such, we are extremely open to engage in a way that is creative, whereby our partners approach us with new ideas and how we can better enhance our capital and create more value. So, in simple terms, ADNOC strives to become a very modern NOC. We don't want to be dependent only on our balance sheet. In fact, we want to stay away from our balance sheet. We don't want to tap into only our cash or available resources. We want to be very smart on how we use our cash. Having said that, this will require a completely different mindset on how we conduct our business. So efficiency, high performance, and profitability have been instituted as main pillars of how we conduct business. And we expect our partners to do the same, it being financial partners or our international oil and gas partners, as well as the service providers and suppliers. What we have done in a very short period of time, and I appreciate Khaldoon referring to the phenomenal results that have been achieved in 2017 and also in 2016. Where we're going, the way we're going to go forward, building on such achievements in 2017, is simply going to be as follows. We're going to unlock value wherever it is possible. We are going to maximize the full potential of all of our operations, and we're not going to leave any stone unturned. The fact that we went out for a $6 billion term loan to fund our future growth, in our view, is a very smart approach, because we know now how to better capitalize on the available cash in our balance sheet. At the same time, the fact that we were able to raise a $3 billion $3 billion bond for the first time ever in this region for such an infrastructure project, the Abu Dhabi Crude pipeline, again, is a testament on the DNA that we are trying to embed in the organization as well as the industry. The fact that we are able to IPO ADNOC Distribution in a very short period of time. And I know very familiar faces here that have actually approached me in my office telling me, be careful, you're not going to be able to achieve this. We stayed the course. We stood our ground, and with the help of our partners, and I must mention and commend the efforts of FAB in this whole exercise. They've actually helped guide this whole process until we got to the finish line. And we delivered a phenomenal result for our shareholders and investors. And we will continue to perform in such a manner, delivering against our ambitious business plan. Now, going forward, you will see new opportunities that are very much in line with what we have seen in 2017. And there are some new creative capital structure ideas also that we are going to be introducing very soon.
I will be talking about potential IPOs in a minute. Mr. Abdulhamid, the merger.
Before you ask, I'd like to thank Dr. Sultan. I had not planned him to say these things, but I thank him in public. And that makes more pressure on me, like... if we...
He's expecting better terms for the next... Exactly. He's laying the foundation.
It was coming. Next question.
Or the demand will increase, so I'm on my toes. Go ahead with the question. Thank you, sir.
I was just saying that since the merger has been completed, and we would all like to know from you what was the main takeaway from that experience.
I think I realized that there's nothing called impossible. Anything is doable. With the leadership vision, clear direction, the empowerment given, and understanding what is coming, because we are in an ever-changing environment. We acted proactively. That's what I saw. I found that there was an opportunity, so the leaders and the shareholders said, jump on it. We saw that whatever we did in the last 1 year, it was brave. It had to have courage. So because I did not see it for, as I mentioned initially, in a decade. And I was so glad that I was a part of it, and along with me, my colleague Khaldoon and others. This is something made me feel today that there are more to come, and we can do better in future also, in terms of if any merger comes in.
So what do we expect from FAB in the future?
I think FAB today, first of all, from the theme we put around here, grow stronger, we think of having the growth which will touch the shareholders so they grow along, and I think Khaldoon just mentioned that a minute ago. We need to have, as Sultan said, grow the customer and grow our employees. What do we expect from FAB? I think we need to be more customer-centric. If anything today I can think of in this world is innovation. We need to be more innovative. We are moving away from the traditional old way of banking. We are transforming, we are changing. We just launched a couple of days back e-wallet called Pay It.
Yes.
So that takes you away from the typical normal banking habit of you come and visit. You don't have to be my customer, but you can have the application and do things. Things are changing. I don't want to go in deep into the innovation, but I think that's where you should expect from us. And my expectation, or I think what Sultan said, I need to always exceed what he wants in future.
I would actually invite everyone to try Pay It because it's an amazing app. Your Excellency, Khaldoon Mubarak, Mubadala investment now. You invest in 16 sectors in 30 countries, I believe. And I think the shift has been quite clear. You focus now on returns. You have offices around the world. Tell us more. Is the new entity now pursuing more ambitious goals and objectives?
Well, I'd like to think that we always followed ambitious goals and objectives. I think we will continue to be aggressive in pursuing our strategy, our diversification strategy, our strategy to bring in positive financial returns, risk-adjusted, opening new sectors. Today, we are lucky in that we have a very strong foundation and a very strong base. So we have sectors that are extremely strong within our portfolio. You look at our investments within the downstream side, for instance, petrochemicals. We have great companies all around the world. Companies like Nova Chemical in Canada, which is the 5th largest specialty chemicals company in the world. We own it 100%. It's a phenomenal company. We own 100% of Cepsa in Spain, which is another great company. Last year, 2017, they had a record-breaking year in terms of both revenue and profitability.
You're partnering now with ADNOC.
Cepsa is partnering with ADNOC. But then you continue, Borealis, another leader in the polyethylene and polypropylene sectors. We own 67% of that business. So that is a very mature business. It's a very counter-cyclical from our perspective because we have also a significant exposure to the upstream side in terms of oil and gas operations upstreams, which is a good business. But when you have low oil prices environment as we had in the last couple of years, that petrochemical business carried us and did extremely well. So for instance, our petrochemical businesses in 2017 carried our energy portfolio overall and balances us very well. So that's extremely well. But we are heavily vested in other sectors like technology, semiconductors, healthcare. We are putting into our portfolio defensive sectors, real estate, infrastructure, biotech. These are new areas that agriculture, that we didn't invest or we have a low portfolio exposure to in the past that we intend to grow. That's led us to opening up offices around the world. Yes. Today we have an office in San Francisco that's focusing into our investments in the technology sphere. And that's done extremely well. We have an office in Brazil, which manages a significant operation we have in South America, South America was, if you asked me 5 years ago, 10 years ago, we didn't have any exposure to South America. Now we have a significant exposure, and we have an office that manages that exposure out of Brazil. So it's a very, I would say, exciting time for us in Mubadala because of the strong base we have and because of our clear strategy moving forward that we are pursuing with a fantastic group of individuals in the UAE and around the world. We have a very talented management team, and I think you will see hopefully more innovation and more interesting sectors that we will be investing in.
Speaking of partnerships, Dr. Sultan Al-Jaber, you've announced recently, he just mentioned SAPSA, the Spanish company. So you've announced strategic partnerships. One of them is SAPSA, one of them is a group of companies from India. The Japanese company, Impex, as well, all within the course of a month. What is next for ADNOC?
As part of our SPC approved 2030 development strategy for ADNOC, we are adopting a new strategic partnership model. And of course, while we appreciate and highly value all of our existing partners, we are looking into a new mode of engagement that is going to be simply centered around the value that can be created for Abu Dhabi and for the UAE and for ADNOC. What do I mean by that? It is no longer us only attracting such investors to come and take a share and lift out crude. We always want to think what can be done with every barrel we produce. So number one question we ask, how are you going to help us stay very focused on reducing our unit cost per barrel? That is not going to change regardless of oil prices. We do not control over oil prices. What we control is only one thing and one thing only, and that is the oil price the cost per barrel of our production. So that is going to continue to be our main focus. So every partner that wants to come and join ADNOC will have to come up with creative ways of helping us drive more efficiency and more profitability. Growth. ADNOC is actually growing, but we're going to adopt a smart growth approach, a smart growth model, which will require our partners to give us market access. Market access where those markets will have to have a strategic rationale for us. At the same time, they'll have to also help us better adopt smart financing mechanisms and introduce smart technologies while also providing our own UAE nationals the training and development opportunities. So it is a set of criteria that we evaluate such strategic partnerships against. And I must say, since this new strategic partnership approach was announced by the SPC, all we've received was an overwhelming, very positive response with commitments from all over the world. And as such, you have seen and you will continue to see new partners coming into Abu Dhabi through ADNOC with this very mindset of helping achieve more value and maximize the profit for our operations.
I would go back again to the IPOs. After the successful ADNOC Distribution IPO, can you tell us or give us a little preview of any upcoming potential listing?
Well, you know, I cannot go into specifics.
Will you please?
But you should know, and I think the financial community is somewhat already aware and alert of what's coming. There will be more opportunities for us to engage on. I cannot name any at this point in time, but it is a very exciting time for us in ADNOC. I know for a fact we are going to be very busy for quite some time introducing new creative ideas of helping drive cost down and maximize value for our shareholders.
So there's something happening, and we will all excited to know in due course. Mr. Abdulhamid, you mentioned the challenges. The global banking landscape continues to change. So from new regulations to new technologies like blockchain, rising interest rate in the whole world, which one of the three takes up most of your time at the moment?
I think the importance of all three is a must. I mean, we have to look at them, and there are others which you did not mention. Regulation is very important. I think banking in general, or any sector cannot operate without having regulations. The regulatories are the one which making us saving the financial sector. So we have to be within our core purpose of why the financial institution should be there. Interest rate is important, but I think this is cycle up and down. We are agile, and we are always ready for it to see where it goes. All the banking should be accordingly. You talked about the blockchain. That's very important. I mentioned it a while ago that the whole theme is moving away from the old traditional way of banking. Today, and I was mentioning in a group a while ago that people looking for convenience, people looking for things for them to happen on the spot.
Absolutely.
So you need to bring them or facilitate them to do that. And banking ought to do that, otherwise somebody else will grab the rugs from our feet. And we saw that happening in the financials. So all three are important, and that's taking most of our time. One thing which is only temporarily within the technology, which is the integration, taking my time this year, the system integration between the two banks, and that hopefully within, I can say from now, 279 days will be done. We counted day by day.
And on that note, I would like to wrap up because we're running short of time. Thank you very much for your time and sharing your experience and thoughts. Ladies and gentlemen, His Excellency Khaldoon Mubarak Mubadala, His Excellency Dr. Sultan Al-Jaber ADNOC, and Mr. Abdulhamid Saeed, First Abu Dhabi Bank.